So we've got three messages for you this week. One on economics, two on markets, and three, an update on the EU referendum. Message one, economics. So on economics, yesterday we saw no change out of the ECB in Europe on interest rates, and the door remains open for further support there, which is good news. We've also had Q1 GDP numbers coming out of China, which came in at 6.7% growth for the first quarter. That's very much in line with market estimates. And I think more broadly on EM, we remain neutral on EM, but structurally overweight in portfolios, which is good news. Generally, EM has been strong this year, particularly Brazil and Russia being up over 20%. Message two, markets. Markets have continued to rally this week. Generally speaking, we've seen the FTSE and S&P up again. We're now in positive territory for the year, up 2 or 3%, something like that. That's a very big turnaround from the lows in mid-February. We remain cautiously optimistic, despite the fact that sentiment indicators are still fairly low, and FTSE returns in particular have been driven largely by very strong returns in the commodity space. Message three, EU referendum. So the EU referendum is still a very hot topic of debate, and that's likely to continue, particularly given Obama has just landed in the UK. I think given the fact that we've seen strength both in sterling and the UK stock market over the last month, it reminds us that investment is all about long-term investment and that event risk is largely unavoidable. If you'd like to see what we've recently published on Brexit, please go to Coutts.com.